Hello again, welcome to this video. Last week we spoke about Toronto Real Estate Board Market Watch for the month of May 2020, and I promised that there are some guidelines CMHC is changing as of July 1st, 2020. I will be sharing it with you in my next video, and here we are. This video is all about these guidelines. There are basically three major changes which CMHC is trying to impose as of July 1st, 2020. And CMHC is Canada Mortgage Housing Corporation. They apply these changes to only insured mortgages. What are insured mortgages? Insured mortgages are the mortgages where the down payment contribution from the borrower is less than 20%. Anywhere the down payment is more than 20% is an uninsured mortgages. So let's be clear, these guidelines are only for insured mortgages where the down payment contribution from the borrower is less than 20%. Let's dive right into it. There are three major changes. The first change is going to be your debt service ratio. What does that mean? How much debt you can actually afford to have with your present income is debt ratio. There are two kinds of debt ratios, gross debt ratio and total debt ratio. We will come right into it. Let's take an example. If somebody is purchasing a home worth $500,000, the gross debt ratio, that means your principal, interest, property tax, and utilities, and condo fee if applicable, should not increase more than 39% of your income. Let's take an example. If the down payment required is 5%, interest rate is 2.75%, the income required to get a $500,000 home with 5% down payment is $85,000. And the total debt ratio is 44%. What does that mean? That besides the debt for your home, for your mortgage, principal, interest, property tax, maintenance, which is a condo fee, and your utilities, any other debts like your credit card debt, your line of credit, your car loan, it should not increase 44% of your income. But there are changes coming as of July 1st. Let's take an example in the new scenario post July 1st. Same house, $500,000. The gross debt ratio is going to be decreased to 35%. What does that mean? To afford $500,000 home at 5% down payment, the income requirement is going to be about $94,000. So $9,000 more income is required to purchase the same home. If more income cannot be, if you do not have more income, then the property value has to be decreased to match this criteria. And total debt service ratio is being reduced to 42%. So mortgage conditions are going to be tight for insured mortgages. Second change, there is another change which is coming, and that is also very, very important for any insured mortgages. As of today, if you're purchasing any home, regardless of what the price is, if the mortgage is insured, your debt, your credit rating, your credit score, minimum credit score required is 600, which comes in a fair category, but it's changing. As of July 1st, any home, for that matter, if your mortgage is insured when you are paying less than 20%, your credit score required is increasing to 680, which is a good rating. That is a major, major change coming in this market. And there is another change coming than the last one. Again, an important one is that earlier, as of today, You could borrow from your credit card, from your line of credit, to purchase a home and use that money towards the down payment. You could borrow it. As of July 1st, 2020, same scenario. If you want to borrow, you cannot borrow from any unsecured source of debt, like your line of credit, your credit card. Yes, you can borrow from your relative, you can take a gift from your relative, so on and so forth. You can get a government aid if applicable, but you cannot borrow from your unsecured resources of debt. That's it. These are the 3 changes which are coming down as of July 1st, 2020. Thank you very much again for listening. My name is Umesh Uppal. I'm the broker with Royal Page, your community. Whichever media you are watching, social media you're watching on, just click subscribe. Send me a message if you have any questions. Thank you very much again, and stay tuned. We'll be coming up with some assignment questions answered. There's a lot of confusion around assignments in pre-construction. I specialize in pre-construction properties, and we will be talking about what happens when you assign, what happens when you buy an assignment. Thank you very much again. See you soon.